Do my best, bear with me. The other thing is that actually I chose deliberately this time not to talk about our engagement in the crypto space, our latest progress in engaging in crypto, digital assets and stablecoins. All of those things we are particularly proud of, but on the other hand, they are also transparently available publicly. So we've had comprehensive media coverage on our latest steps, and we're particularly really proud of having joined the Stablecoin Consortium just recently. But as Mr. Strobel outlined this morning, we are very much looking forward also getting our own things done and ultimately also published and going live somewhere next year. What I'd like to do is I would like to connect a little bit about two things. Strobel also said at the very beginning that we are actually quite late in terms of established institutions coming to the table, discussing about crypto. There's all various different reasons of why this is the case. But I want to give you a little bit of insights, and rightfully said in the intro, a little bit philosophical insights, so please bear with me, on how we see a clash of the very rapid and very speedy developments in the technology itself, and how an established and highly regulated institution like ours needs to react on that. I also need to apologize that I need to go to the lectern, because, I hope that does not create, because I had the privilege that my team was preparing my slides, and they gave it a lot of animations, so I need to look through that. But as a goodie, it's very colorful. As said, today I want to raise a few fundamental thoughts and questions that will accompany us also throughout this day. I believe that I want to start with a very fundamental tension that we see in our industry today, that is that we have this relentless rhythm of Moore's Law. You all know Moore's Law, that is, it has basically become the heartbeat of our digital age. It's driving financial innovation, it's driving technological innovation from back then room-sized mainframes into pocket-sized devices and payment systems, but ultimately, as we see it today, developing into decentralized networks with little or no human oversight. Moore's Law has been actually kind of the invisible force behind us, propelling us from these ledger books to algorithmic trading, from branch banking to mobile banking, from centralized clearing to decentralized and distributed ledgers. But while Moore's Law dominates actually the headlines, this is what you usually read about in the news, there is another law operating in the very background, rather silently, but still very important to us. And as said in the intro, this is Murphy's Law. Murphy's Law is quietly reminding us that in the race toward digital innovation and transformation, anything that can go wrong will possibly go wrong. And we've seen this over the last decade, specifically also the blockchain space. I just named it Luna 9 decoupling and all other fraud cases, etc., maybe technical glitches. You know that stories. However, these forces seem to be, for the moment, colliding at a very unprecedented speed and scale. So this very speedy exponential technological progress is actually meeting the inevitable human and institutional reality that we see in scaling that. So for us, the big question is, how do we actually navigate this intersection of determining the future of banking and bring it in line with security and trust? And also, as Mr. Strobel said at the very beginning, trust is still at the very core of the banking business. So we've seen now over the last decade, we have watched more or less a collision approaching. I just now take very randomly, but I think fitting to this setup today, the blockchain as a development. You know, we have seen cryptocurrencies emerging. We've seen blockchain in general developing from a kind of academic curiosity into infrastructure reality. We have seen blockchain developing from academic papers and white papers to actually infrastructure that processes billions daily. And in parallel, we have also seen processing power still, along with Moore's law, doubling, and computing powers and storage space being basically limitless and cheap. However, Murphy's law still stayed persistently in the background, and every innovation that we brought forward also brought along new attack vectors. And it brought new failure points, and it brought new breaking points. And the faster the technology developed, the more complex our, also here in the regulated space, security challenges became. And here is an example, not just speaking about blockchain, but also specifically about the recent developments in the AI space. When you have been relying on video identification for KYC processes and ultimately end up in facing a challenge because of deepfakes generated by AI. So I believe that the collision has created kind of four fundamental challenges that we believe need immediate actions. The first thing is I strongly believe that the growing digital asset ecosystem needs and requires a very trusted bridges between traditional fiat and crypto. Secondly, I believe that tokenizing traditional assets needs dependable settlement layers. Thirdly, cross-border payments demand infrastructure that is not only delivering digital speed, but also banking security. And thirdly, and I do want to highlight that specifically also because we just heard about the US developments, European digital sovereignty becomes strategic for us because we cannot risk, or I would not like see us risking monetary flows diverted into foreign alternatives. So Murphy's law actually manifests itself in three interconnected challenges. The first one is regulatory security. For me, regulatory and regulation isn't just compliance. Regulation started to be also an innovation driver. So an innovation driver also brings planability. It builds customer trust and gives us as a regulated entity the permit to engage. So if you see it like that, MiCA is actually not only a bureaucratic burden, but it's also the permit that helps us transform experimental technology into a legitimate infrastructure. So, secondly, trust scaling. As I said, Murphy's law predicts that we have this doubling in computing power at resistors specifically. The problem is that trust networks do not grow exponentially. They grow rather linearly. So, and this is constrained by human psychology and by institutional processes. And we need to align that to different and significant differently kind of speeds. And third, we see a knowledge gap. The faster that the technology develops and evolves, and I see this constantly in our internal discussions with all kinds of stakeholders, that the wider the gap between what the technology is technically allowing us to do and what stakeholders actually do understand. So I strongly believe that ultimately education will become our primary and our first security infrastructure. So what's our response to that? I know it sounds easy and quite obvious, but recognizing these realities, we believe that we must develop strategies that cater to both. So rather than choosing just Moore's law on the innovation part, we also need to take into account the Murphy's law with its cautionary approach. And we need to harness and tackle these two things simultaneously and not either one or sequentially. So I also believe that the very years that we ourselves, also in RBI, spend on building up the knowledge and the understanding of the blockchain technology, building up the internal expertise also in compliance and preparing ourselves for this regulatory clarity, they were not wasted time. And even if you would think that we are late to the game, but actually this helped us really prepare for this, creating this very sustainable foundation for innovation. At the intersection, we have a little bit of a trust paradox. For the moment, we as RBI found ourselves, and I would dare to say so, relative to other regulated institutions, quite advanced. But actually, compared to the crypto industry itself, that moves faster, that has a greater risk tolerance, we can still learn a lot. So we as a regulated institution, we cannot go fast and break things, because if I break things in banking, broken things mean broken trust and potentially also broken financial stability. But I have a tendency to see that as an advantage by building trust at the speed of confidence rather at the speed of code. We are creating a sustainable foundation to make and to survive regulatory scrutiny. So the other thing is that this was now very much based on the current status and the status quo, but actually we are also building more than just today's challenges. We are creating basically, sorry, I need to jump over that for the sake of time. We are creating the transactional backbone for an economy when agentic AI, digital identities, and open data will intersect. So I imagine intelligent agents autonomously negotiating contracts, or digital identities enabling seamless cross-border interactions, or open data enabling us for completely new, broader insights. So stablecoins can actually be the very fuel powering the system, and the programmable money enabling machines to transact with machines, AI to interact seamlessly, value to flow as freely as information can flow. So and this is also why our recent involvement in the European Stablecoin Consortium is that we strongly believe that we build something with security-first principles that can become the trusted foundation for this Web3 economy, enabling all these things that I just explained, and also enabling us to engage in business models that we might not even have yet imagined. Looking forward, this collision, I think, will still intensify. Quantum computing, for instance, AI automation and decentralized organizations will both bring opportunities and still a lot of challenges and risks. Quantum computing certainly will bring unprecedented computational power, but certainly, almost certainly, also a lot of security challenges. AI will automate complex processes, but while still providing and creating new algorithmic risks. And I strongly believe that the institutions that thrive will be those that master navigating this balance and that intersection. I want to emphasize that I strongly believe that this intersection is not a problem to be solved, but this is a permanent condition to be managed. So this is not something that I do once. This is the very foundation of what we are continuously doing in our day-to-day business. So ultimately, in wrapping it up, I believe that this is both the challenge and the opportunity of our time. We are not just building the technology, we are also building the monetary infrastructure that will fuel and hopefully fuel Europe's leadership in the age of agentic AI, of digital identity, and the Web3 economy. And I believe that those who master this dance between Murphy's Law and Moore's Law will create systems that are both, and I deliberately take both ends of the spectrum, innovative and trustworthy. This is not a contradiction. Cutting edge and still be conservative. Globally connected, but still locally accountable. And the question for us in this room also here is, how do we collectively manage and navigate this intersection to build a trusted, secure foundation that we need and that will enable the next generation of financial innovation. And I think today in this forum, this is the best place to start the discussion. Thank you.